Hello and welcome back to Bunnex Investment Group. In this video, I'm going to teach you one of the most powerful trading strategies. That is for those who do not want to stay slower time frames like the M15, M30, H1 and so forth. We are going to start off on the H4 time frame. Why the H4 time frame? Basically, the H4 time frame is where real institutions take their decisions from. They do not trade off the lower time frames. When they come to the lower time frames, basically they'll be trying to study what is happening with retail traders. So we say the powerful liquidity is actually found on the higher time frames. When we say liquidity, we are actually talking of regions where they are going to add their positions, or basically where they are going to close their positions, right? So this is an H4 chart on odd against CHF, and this is the one that I'm going to illustrate for you how this actually goes on. So basically, if we switch to the H4 time frame, our chart will become segmented into weeks, and within those weeks we can clearly see the high and low of the previous week. So our entry strategy is going to be basing on the high or low of the previous week, right? So basically, at these highs and lows, we have the liquidity that is actually sitting above. I'm sure you've actually seen where people actually mark charts like this. They actually mark the high and the low and actually put some dollars in here. This is mostly done by people from the ICT. It's not something that is special, but what they are actually marking off is the swing high or the swing low for that particular week. So what I'm going to do, I'm going to illustrate from these particular points so that you can actually comprehend what I'm trying to put across. So the first thing that you're going to do, or the first step, is basically to mark the high and low of the previous week. So this is the high of this week that started here and ended here. After marking the high and then its low, the market tends to approach these particular values before they actually do or give you any significant move for the week that you are currently in. So basically, as a theory, we are saying when you go to the charts, the market will try to violate the last week's high or last week's low before it makes any significant movement. But we say it works sometimes like in any other strategy. Sometimes you'd find out that the wicks will be actually going straight from each other, like in a range, or basically in a trend. So in this particular case, after marking these highs and lows, what we are going to look for is basically an H1 reaction after it reaches those highs or lows. So in this particular case, you can see that on this particular week, we can see that the market went to the downside and violated the low of this week. So after violating the low, what we'll now be looking for is basically a manipulative pattern, which is basically a double bottom or a double top under the low of that particular week. So here I've marked the price section that is below this low, and then we are going to as well look at this particular week later. So to switch on to the H1 time frame, this is what we see. After the market violated the low of the previous week, it gave this W pattern, first leg, and then after that, the first leg, it actually came back to the first leg level. So in this particular case, let me remove this so that you can clearly see. So when it comes, or when it violates and then starts to pull back, you find your point of reference. And from that point of reference, what we want to do is to basically mark the high and the low of the last red candle within that particular flow. So in this particular case, the last red candle is this one, and then we protrude the high and low of that last red candle into the future so that we can see a point where they were going to tap again in that particular region. You can see they came, violated the low of the previous week, and then after that they came to retest that first leg level, and the market actually went straight right to the upside like that. All that we will be wanting to target is at least 50% of the previous week range. So in this particular case, 50% was somewhere in between here. So your target will be from this right to this particular point, right? Let's have another example so that it becomes clear. So in this particular week, we can see that it started here and ended here. What was the high? Its high was this one and its low was actually this one. So from there, we mark the high and the low of that particular week so that we can see where it was actually violated. In this particular instance, we can see this is the price action above, which you'll be marking out in real time, right? So in this case, we can actually mark this, go to the H1 time frame, and on the H1 time frame, what we can see is after violation, what was the last green candle after it went to the upside and then retraced. We can see that this was the last green candle that was issued, the high and low of that last green candle. And if we protrude, we can see that one could have actually validated this as the second leg, or you could have validated this as the second leg. It all differs by our choice. So after that, we can see the market went to the downside. And as I've said, we need to look at the 50% of our previous week. So 50% was somewhere in here of our previous week, and the market actually did this. So someone would ask, this is only on odd against CHF. How about other pairs? This is USD against Canadian dollar, and we can as well mark the highs and lows on this particular pair. So in this particular case, I've already marked the high. This is the high, and this is the low of this particular week. And if we go to the H1 time frame, we can see that the low was violated with this particular price action. So on the H1 time frame, this is what we will look for. Let's check on the H1 time frame. After violation of the low, did they issue a setup, right? So in this particular case, you can see that the setup could have been validated, or you could not validate it, because this could hold as first leg, second leg, but all that we can see is the market went right straight to 50% of the previous weekly range. So basically, that is a strategy that you can backtest. We are saying it will not be 100%, and it's not always the case that you are going to get winning entries. All that you need is to at least have above 50, above 60%, and you are good to go, as this strategy actually satisfies a 2-to-1 reward to risk ratio. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. I'll leave the link in the description box below.